The question was, can I get out of my premium selling position before expiration? So we keep talking about how you sell premium and that premium has an expiration date in the next 3 to 5 weeks, and you wait, and at the end of that expiration date, you either get exercised or more likely you get to keep that premium. It expires worthless and you get to take and do the transaction again and again on whatever you set to cover that premium trade. But the question was, is there a reason why I couldn't exit out of the premium trade early? And I wanted to show Pulte because I did exactly that. So let's take a look. I've been following along. You guys might remember that we've been trading Pulte. We bought some shares of stock. We paid about $52.85 per share. We bought 500 shares, which was about close to a $26,500 investment after commissions. And then a couple days after buying that stock, we sold our premium for 25 cents, and we bought some protection for $3.30 a share. When I don't know why that says 18 cents. Oh yeah, $1.21.28. That's when it expired. That comes out at zero. Perfect. So our first round of selling premium, we did wait until the expiration date of January 21st. And on January 21st, our premium expired. Nobody wanted to exercise our position, so we got to keep our position in Pulte Home. So we got to realize that 25 cents. And about a week later came the best opportunity. Pulte started to actually go down in price, as you can see here. Just like the broad market, it has kind of a change in personality. And so we let our protective put just ride that move, and we wound up liquidating it at one of its range expansion bottoms at $6.50. So that's kind of nice because we bought the protection at $3.30. When we rolled it out, we got $6.50 back. So not only did it offer us protection, but man, did it help the economics of our position big time, in addition to the 25 cents we made for the month of selling premium. So we looked for an opportunity to do it again, right? Because we like to just do this again and again and again. So we got this opportunity to sell our next premium. Our next premium we sold for 85 cents. We bought some protection for $2.70. That was on February 3rd and 4th. February 3rd in the afternoon and then February 4th during amateur hour because I couldn't get the trade to fill on February 3rd. So that happened up here. Where's February 3rd? That happened up here on this bar right here. So every time we have a move up, we like to go ahead and sell our premium and buy our protection. And sure enough, 2 days later, we're back down and we're starting to hint back up again. And so the question was, at that point, why am I waiting until the expiration date? At that point, the underlying premium we sold has already decayed. So you have to remember that options will decay with time. We know at their expiration date they're worthless, but they'll also decay with the underlying symbol move. And so when that underlying symbol move tanked, so did the option price. And if it's close to zero, which is what it'll be, why not get rid of it now? And the answer is you can. In fact, many brokers, and talk to your broker, actually want to incent you to go ahead and liquidate these worthless positions. A lot of times, if the position is less than a dime or a nickel, check with your broker for specifics, they'll let you liquidate it commission free. My broker did that. In fact, I was able to go ahead and liquidate that position. Like I said, I bought this thing for 85 cents, or I sold this thing for 85 cents. I bought it back for a dime, so I made 75 cents, and they didn't charge me any commissions. So if the value of your option decays ahead of time, instead of waiting till the expiration date, there's no reason why you need to hold on to this obligation that you created by selling an option if it's worthless. go ahead and liquidate it. And you might even get an opportunity again to sell another option for the same month and make some more premium. We've been looking for that opportunity here. It hasn't quite materialized. Technical issues with my mouse, I think. I should have checked my batteries before coming on the show. But anyway, no, there we go. I got a little bit of life left in me. The scoop is we've been looking for this opportunity to go ahead and do some premium. It's been moving a little bit too for us, but that's absolutely a valid thing to do. If the value of your premium trade is down below a dime or a nickel, especially if there's a threshold set by your broker where they'll let you liquidate it for free, do it. And then see if there's another opportunity to double your commissions in that same month, double your payback.
Yeah, I think that's a really good lesson in terms of the premium selling strategy. Go ahead.
I gotta say one more thing too. We got a question last week about why wouldn't I just buy and sell options inside these channels? And I mean, buy and sell the stocks. Why do we sell the premium? Two quick answers. I mean, you could spend a whole graduate level course going into the nuances of one versus the other, the comparison. But a couple things is when we sell the premium and buy the protection, these become passive thresholds of given profit, meaning I don't have to rely on stop loss orders that sometimes don't fill, right? Because the market moves too fast. I've now got passive strategies that create a trade zone between these two bracketed numbers that I'm guaranteed to not lose risk above, and I'm guaranteed to lock in max profit if I go above the level to the top. And so that's why we do it, because if you don't want to be staring at the market being a day trader per se, and you'd rather just allow your investments to roll, and if something inadvertently happens, you don't lose your shorts, you set up these trade zones that work passively. In addition, if the underlying symbol is moving horizontal, it's easier to make a lot more money selling premium. The theta decay component makes more money than if you were buying and selling at the peaks. So that's why we do this.